So in this video, we are going to talk about trading opportunities using the yearly accumulation, manipulation, and distribution for the already anticipated week 2 of February distribution in terms of the accumulation, manipulation, and distribution for the year. So inside of our teaching that we've discussed within November 2024, I have stated the fact that we want to see the market expand higher, and the seasonal tendency for February and May is going to be higher. I want to see the market distribute higher, and said distribution will start within the second week of February because we have the accumulation and the manipulation happening within the month of January and everything prior to the week 2 of February. So if we're going to look at the economic calendar, this week in particular was the CPI week, the CPI Wednesday, and our rule sets state the fact that we can trade Wednesday, Thursday, and Friday. We can also trade Monday because this is not a normal week. We can trade Monday, but of course I try to filter it out and I try to trade within the highest degree of probability conditions. And I will also filter out Monday, even though we've had a decent or even nice delivery. But I will try and filter it out and try to trade after the 8:30 event on Wednesday. As we can also see, we've had 8:30 core PPI on Thursday. We've had also core retail sales on Friday and a lot of President Trump speaks. But our attention is going to be on the CPI on Wednesday, and that is a weekly impacting high impact news driver. So our trading days, even before we go into a weekly chart, are going to be Wednesday, Thursday, and Friday, with the perspective of looking for high prices based on the yearly time, based on the time of the year. And said time of the year is also correlated with the power of 3 or the accumulation, manipulation, and distribution, because the market first, in every singular time frame, it opens, then it manipulates into the opposite direction in which we anticipate the bias, whether it's a monthly chart, whether it's a weekly chart, whether it's a 1 minute chart. We will always want to see some form of manipulation happening for the low or the high of said time frame to be created, and then we're going to try and trade within the distribution after the manipulation has occurred. So the plan for this week was to seek a distribution to the upside on Wednesday after CPI, Thursday, and Friday. Looking at a monthly chart, we can see the first thing that I look at is the institutional order flow signatures. And again, when we're talking about a monthly chart and higher, I advise you to not get too much complication with the 3 month chart, with the 6 month chart, with the 12-month chart. Do not try and do that. Instead, I want you to only look at a weekly chart. You can also look at the monthly, but I would want you to stay within the weekly chart because otherwise it will get too complicated for your current level. And I want you to advance slowly into your understanding so that you can then go and see monthly profiles, like have weekly profiles when it comes to the CPI, when it comes to the FOMC, and so on and so forth. I also have monthly range profiles in which I want to see a specific week do a specific thing based on the monthly chart. But the only thing that I'm looking inside of this monthly chart is the institutional order flow signatures. And what I saw within this month was the fact that the market closed above the 25% BT, which gave me the insight that the market is going to seek the 50%. We indeed went into that right here. Market fell short of the 75% BT. This is one of my yearly targets. It is a standard deviation based on a 12-month retracement, but you can also see it within a 1 month. And for this specific week of February, or for this specific month rather, we saw the fact that the market went back into a busy instead of the January 2025. We opened, went lower into the busy, and also the order block. We can see that this is also a propulsion block, so the market should expand higher with speed within our yearly perspective. But if you do not have a yearly perspective, then you can just go and read the institutional order flow signatures within the monthly or the weekly. But I want you again to stick to the weekly. We had the market opening, going back into the busy, rallying higher into the 50% BT, 75% of this wick, and then we retraced back. But if I am trying to see higher prices, I will never want to see this as a swing high, and then we're going to retrace back into these levels here. I instead want to see this as, or the next candlestick rather, I want to see this decline, this swing high, and if it does, I want to see that with speed. And at the same time, because we went back to this busy and then we rallied away from it, I would never want to see the market go back below this low, which means that we have 1, 2, and then the third, we have the swing low, or we anticipate the fact that February's candlestick is going to be the third candlestick of a swing low, which means that I would want to see the low of the month being created within the 75% in the best scenario, the 50%, which is also correlated with the 25% BT. And I want to target the consequent encroachment of this, a repricing back into the 50% BT, consequent encroachment of this wick, previous monthly high, and then eventually the year of 2024 buy side liquidity pool. But the only thing that I care about is the bias, and the bias for this month is going to be bullish. And yet again, I never want to see the market go back below this. So the lowest point in which I would want to see the month go, and once it does that, I understand the fact that the manipulation has been created, and then I can trade a monthly distribution, is going to be 75% in the best case scenario, which indicates speed, and also the 50% of this tail, which again would be a normal retracement, and then we can seek a distribution to the upside. This is a weekly chart, and this is the set, or this one rather, is the January low. We can see that the market consolidated beautifully within our perspective, that we are going to trade only after February week 2, or inside of the February week 2 to May week 2 seasonal tendency. You can see how we beautifully delivered a swing low here. Market went higher, closing above the reclaimed busy. We opened below it. We would never want to see this being taken because of the monthly level, but at the same time we have a swing low that has been created in a weekly chart. We saw the market within the last week open, use some form of, we did not use the lower quadrant of this, I believe. Here, this is consequent encroachment. This would be the lower quadrant. We fell short of it. This could be a sign of strength, but yet again, we are inside of this consolidation. But basically, what I'm looking for in terms of distribution is bullish institutional order flow signatures. And I can see the market opening, going lower, creating a short low of the week, higher into the 50% BT, and then we traced back below it, and we closed above the weekly reclaimed busy, which tells me that the next week can open, use said busy high, which I would want to see if the market is indeed going to go higher with speed. I would never want to see this low being taken. We can see the fact that the market has created yet another swing low here. And as we are anticipating the market to expand higher, I would never want to see the upper quadrant being violated, the 50%, the 25%, or the low, and yet we never saw that occur. My targets for this particular week would be the previous weekly high, consequent corresponding of this wick, this here, which is a monthly level, and of course these upper quadrant, consequent corresponding of the wick and the 24 buy sell liquidity pool. So if the market would have went back into the 50% of this, and it would show the fact that the market wants to go lower, I would either reverse or I would stay still and not do anything until we leave this range. Or if I indeed want to see the market reverse, I would want to see this low being taken out, this low being taken out, this one being taken out, and eventually these ones. But we also closed, if I'm not mistaken, above the 25% of this. So we can also use this order block. So the market opened, we've had a bullish perspective, and based on this bullish bias, along with the narrative elements that I have described, we're going to trade within a bullish perspective on Wednesday, after CPI, Thursday, and Friday. And let's see what the market did on a daily basis. This is the daily chart. This candlestick is responsible for Monday's trading. This one is for Tuesday's trading, Wednesday, Thursday, and Friday. As I have stated, inside of a CPI week, we can also trade Monday, but I choose to filter it out because I want to trade the sweetest and the easiest trading if I'm going to trade within a one direction or within a one directional perspective. You can see the market coming back into this busy here, and also this volume imbalance, and this is a weekly volume imbalance, which is the difference between this closing and the opening. This gap here, this is a volume imbalance. We've had the market retracing back into this busy, making it efficient. Then we left it, making it balanced. Of course, we have to take on a swing high, but we're going to already anticipate that to occur because of our weekly anticipation. The market closed above the 75% of this order block and also above this reclaimed busy, which tells me that within the next days, I want to see the market stay above it and close above it and use it as a means of support, while also using this order block and never crossing Monday's low, because we've already formed a swing low, retracing back into this busy. So what am I going to expect on Wednesday? Market comes back below this low. When? During the CPI. Market opens, goes back below that low, and once we're trading here, we can start looking for the weekly distribution. You can also trade this wick creation, right? So when we're here, and you're going to see that this low has been created within the CPI, this, after CPI, we're going to start hunting for the weekly distribution. So market opened, went lower, never touched this low, and only touched the weekly volume imbalance, went higher, and then we closed at the 25% of this wick. So therefore, my targets for Thursday trading are going to be what? Easiest of them all, consequent corresponding of this, because if we were bearish, the market should have respected this swing high, and if we're not bearish, then we want to see the market trade above it with speed. This would have been one of my targets. This would have been one of my targets, and this relative equal highs here. Market opens. Where does it go? Back into the upper quadrant of this reclaimed busy. And when we have a busy with a volume imbalance, we're not only going to take the high and this candlestick's low as a busy, we're going to take the whole with the volume imbalance. Market opens, goes back into the upper quadrant, and then we can see the market rallying above the weekly and the monthly target of the previous 1 month high. So therefore, when I go in and I want to see Wednesday, Thursday, and Friday, I'm going to go in with a bullish perspective, and every singular signature should be seen as bullish. So when the market opens and goes back into this order block, because we're inside of an expansion, I want to see the market quickly reject that and be sent higher above these highs, which are, again, an easy target in terms of daily targeting. We can also deviate this range. We can also deviate some form of a breaker within this range, and we're going to get this exact level. I also want to state the fact that after Thursday's trading, Wednesday comes in, we can see this as a balanced price range dealing range, because the sole purpose of this dealing range was for the market to retrace back into a BISI or take out a swing low. So this could have been used as a breakaway gap formation. Now this is more complicated, but basically what I mean by this is I'm anticipating the market to create a breakaway gap, because I've already seen the signatures of speed that were shown within the weekly and the daily. So therefore, I would want to see the market leave this gap open or form this gap even before the market opens. So if this is supposed to be a fair value gap or a breakaway gap, where could the market possibly go? Well, I'm going to take this range and I'm going to apply the 25% or the 75%, the 50%, the 25%, and I would not want to see the market go back to this candlestick's high if I want to see this being created as a fair value gap. At the same time, the market closes above the consequent encroachment of the weekly wick, and it falls short of the weekly upper quadrant of said wick, which means that I'm going to have as my targets for Friday the previous daily high. And if we trade above that, then I know the fact that the market has to trade within the upper quadrant of the wick. But in the same time, if I want to see the year of 24 by liquidity pool being taken, I also want to see the market closing above this upper quadrant of the wick, which tells me that within the PM session, we have to be above, and we have to close above at 16 based on time. We have to close above the upper quadrant of the wick. We can also use this as, and this also correlates with the standard deviation logic. Like, okay, I have this as a target, but I want to see the market go above it. How much above it? We can indeed deviate this, and we're going to get this exact high or the closing price right here. Let me just check. Okay. This here is Monday's trading, and this is Sunday's opening price. You can see that the market did not do a lot prior to the CPI. This is the reason why I always tell you to never trade the day ahead of CPI. Look at how the market traded inside of Tuesday. We've had the market on CPI. This is an hourly chart. Market on CPI, if we have a bullish bias, what are we anticipating? The market going below an opposing level of, in this case, sell side, or an opposing liquidity pool. Once we have done that, then what happens? 9 o'clock candlestick or the 850 to 910 macro, because a macro time period, the 850 to 910 is just the difference between this candlestick's closing and this one opening, because this candlestick closes at 9, this one opens at 9. Market opens, goes back. When do I anticipate the market to create the manipulation for this specific time frame? Well, in the beginning of it, right? We have to have the accumulation, the manipulation, and distribution. 850 to 910 macro, right after CPI, what are we aiming for? Well, if we're going to be bullish, I would want to see this as a reversal, as an algorithmic phase of the reversal. And all of this happens at the 50% BT. So once I want to see the market create a reversal, then I'm going to have this liquidity pool in mind, the specific PDRA, and also the reversal liquidity pool, which would indicate my market structure shift on a 1 hour chart. So my session target, or my daily target rather, would be this high, and this high is very close to this one and this one, which would be my daily target, the Monday AM buy side liquidity pool. This should become an inversion gap, and also instead of the 9 o'clock to 10 o'clock candlestick, we've closed above the 50% BT, which can be used again as a means of support. So once we close above it, once we know the fact that the market has to expand higher, I'm going to anticipate the market using it as a means of support. This inversion gap here, 25%, market opens market closes above it, and then within the next candlestick, so this is 9 o'clock, 10 o'clock, 10 o'clock, 11 o'clock, within the 11 o'clock to 12 o'clock, launch macro, and this way the markets go back into these level and trade above the upper quadrant. But basically, we've had an opportunity within the AM session of Wednesday, right after CPI. Everything that I have preached to you over the 2024 year, Martino, or everything that I've preached to you since June 24, Joshua, everything that I've preached is right inside of this week, within a specific week that I've told you in November 24 is going to occur, February week 2. This specific scenario, a one-sided, easy to see week, has just occurred exactly like we have planned it. Thursday trading, market creates the low of the day when, London session, market goes higher, market reverses, goes back, falls short of a discount, immediate rebalance here, market forms a swing low. I want to see this as an inversion gap. I want to see the market continue after the retracement into this BISI. Of course, we've went below it, but we can also use this as a BISI. Swing low. What do I anticipate throughout the AM session? To take on this high and the previous monthly high because we fell short of it. So this is just an engineering buy side. So what am I going to trade within this session? Well, I anticipate this swing low to stay inside the chart. I never want to see this being taken. Inside of this specific candlestick, this is an inversion gap. If we're going to trade bullishly, the market should now finish the retracement and start the expansion, which tells me that I want to see the market use an order block. This is an order block. Market opens. I don't know what specific hours this, but it is between the AM session. Market goes back into the order block. 1 minute, 9:50, 10:10, or 10:50, 11:10 market structure shift. Here, market comes back into the range, and this is the PM session. Takes on the lunch sell side beautifully for you, Martino, for you as a PM session trader. We also fall short of the weekly consequent encouragement of the wick, which tells me what? It is an easy target to achieve, and it is also the EM session buy side, a previous session liquidity pool. Market goes above it, and this would be our PM session target. Again, retracement back into a BISI. Friday, we went back into the upper quadrant, but we know the fact that we want to see the market close above it on a weekly basis or on a daily basis. So I'm going to aim for something higher. So if I know the fact that the market is going to go higher, then I'm going to aim for this. And I know the fact that this should not be a swing high that is going to stay in place, and we're going to retrace from it, or reverse from it rather. And therefore, I know that this is only a sell-side liquidity pool being taken. A BISI, this should be seen as a swing low because we took this high, or intermediate term low rather. And this is a balanced price range leading range. Where does the market go? Back into the order block as we are expanding higher. So what am I going to aim for in terms of the AM session? Again, higher prices. PM session, higher prices. So this specific week shows us what we are patient for. Imagine you've traded Wednesday after CPI. Imagine you've traded Thursday after CPI. Imagine you've traded Friday after CPI. And imagine you've just skipped January 2025. Imagine you've skipped all of that consolidation and you're just coming back into the charts on February, and you just filter out all of the losses that would occur and the mental capital that would have been lost based on you trying to determine a one directional bias within January. And you just come in and you trade this week. You're already done for the month of February and even March. Just with this specific week. Just imagine. But I'm going to let you study this specific week on your own because I'm growing you as independent. I don't want you to be dependent on me. And I'm going to let you study the specific signatures that occurred within the 15-minute chart, within the 1 minute chart, and this also serves as a way for you to see how I study the weekly range study. I hope you enjoyed this one, and I hope you gain value from this one, and I'll see you in the next one.